Hello, Andy Tanner here. Welcome to Rich Dads StockCast. I'm joined by my good friend Noah Davidson. How you doing, Noah?
I'm awesome, Andy. So glad to be
You are
here.
awesome. This is gonna be a really fun one. I get to be the guest host today,
All right.
and they say, Andy, you can interview anyone you want. And I'm like, I'm going to interview Noah and I'm going to interview Corey because they're my favorite guys to hang out with and talk to. So we first of all, congratulations for taking some time to tune in. There's so many people that give lip service to financial education; they never put any time into it. So the fact you've found us in one way or another, and you're investing a little time today to learn, I just congratulate you and honor you for that. I also will declare at the beginning, so I don't forget, website stockcastbonus.com. We have for you some goodies at stockcastbonus.com. And actually, it's a perfect gift because we have there free education, introductory education. You know, if a person's never, if you've never enjoyed making money with options or stocks, that is the perfect place to go to be introduced to the asset class. And I think you'll be surprised by what we talked about today, because everything we're about to talk about today is in that more detailed free training. So if we're going to try to do our very best to make this simple, Noah and I, we're going to talk about 4 income streams, and we thought it would be fun to give a kind of an overview of where we think we are in the market right now, almost in newsletter format, right? What's happening right now? What are Andy and Noah looking at? What am I teaching my students about right now, and what type of picks and all that type of stuff? So with that, I'll also do a disclaimer. Since I am planning on talking about a specific investment as an example, don't just run out and buy this because it could go down tomorrow. Predict the future. And you're going to see why we can make money on this without predicting the future, because we're going to do it based on cash flow, not on stock price movement. And so with that, lot on the agenda, 4 different income streams we're going to pull from the same stock. None of these income streams are going to be a bet that the stock, is one direction or the other. We're going to do ranges instead of directions. And it's just going to, and then an overview of the market. So with the disclaimer, with the advertisements, with all that, welcome again, Noah, to the StockCast, man. Thanks for being here with us.
Yeah, an honor and a privilege to be here. I'm excited.
So people that follow StockCast, they know me. I've been part of Rich Dad team. I used to travel formally as a Rich Dad advisor for about 14 years. Now I do most things from a home office. I don't travel as much, but I've always the Rich Dad mission is just so much a part of my life. And so that's my background as a teacher. Tell us just briefly about your background, Noah, so those of you that have never had the pleasure know who you are.
Well, like a lot of people, I had no idea what I wanted to be when I grew up. And, I went to college for a few years and I wound up getting a job in sales. And that job led me to another job, and I ended up selling some trading and investing software for a few years. And I thought to myself, you know what? I really shouldn't just be selling this. I should be doing this, because I watched a lot of people get up and leave their cubicle with their box of earthly belongings and say bye-bye. You were cool. I never liked that guy over there. I'm out of here. So I watched people do that, and that inspired me. And so I became a student of the markets, and I've been a student of the markets ever since. And I've also had the opportunity. I went and got myself some education, and I ended up being able to coach people. And then I worked my way up into being able to teach people in a classroom. And then I worked my way up into mentoring people. And I've had tens of thousands of people over the years go through my classrooms. I honestly don't know. It's probably over 100,000 or so. But I've taught classes all over the U.S. and Canada and even down south of the border. So excited to be here.
So I'm weeping with joy. Or maybe it's just that we have a pollen count right now that's like a record breaker. So as I weep with joy, it could just be pollen, but I do love you, Noah.
I love pollen too.
I'm telling you, man. Throw in a few studio lights and you really get a treat, right? So Noah runs something at the Cashflow Academy. He's on our team. He runs what we call our Mentor Club, and what we do every single week is we have I don't know, a portfolio of a number of stocks, and we just do stocks and options. And people all over the world, we have people in 172 countries that follow what we do. And so, wherever you are in the world, rest assured. So I told Noah, I said, hey, let's give people a glimpse of what we actually talk about. A lot of people would love to be a fly on, like I always want to be a fly on the wall in Warren Buffett's office and hear what him and maybe the late Charlie Munger would have been talking about. I'm no Warren Buffett, but I have a lot of people say I'd love to be a fly on the wall. And, what does Andy talk about? What does Noah talk about every day? So that's what the Mentor Club's for. And I thought it would be fun to have you on and share a little bit about what we were doing. So let's do market first. The first thing we do is, we get a general sense of the broad market and where it's going. So tell us a little bit about, we've had some recent, what we call pullback.
The market had a nice little sell-off off of the all-time high. And so it came down about 6% off the highs and is currently recovering a little bit. It's found a little bit of support at the 5,000 level for the S&P index. And anytime the market takes a little dip like this, there's two, big question. Do we buy the dip or is more selling coming? And I think the answer is somewhere in the middle. We're heading right into earnings season. We're at the heart of earnings season where all the big mega caps companies, the big fish in the pond, so to speak, are going to be reporting earnings in the next 2 weeks. And I think a lot of the market's response it'll be stimulus from the announcements, the earnings announcements, and the market responding to the information. So that's kind of where we're at. And everybody's kind of waiting for a rate cut, but I don't think we're going to get one until the fall. So,
and there's an illusion that people think they have to predict the future.
Yes.
Buffett never self-labeled himself as the Oracle of Omaha. Other people did because they think his talent is predicting the future. But if you read his yearly letters, he's made mistakes, and like everybody else, he doesn't know where the market's going in the short term, and neither do we. And that's why it's so important to learn techniques that don't require, for example, I love real estate, and I have two reports that come to me. I have a real estate property manager that manages local single family houses, and then I have one for syndications, bigger things, and I get reports from both. And I never care, and Zillow knows what I own, and so I'll get all these emails from different properties that I own telling me whether they went up or down. I don't care. I just want the rent.
Yeah.
And so collecting rent is a cash flow strategy. And I just want to tell people, when Noah says buy the dip, he knows what I do. I want to buy everything all the time.
Well, yeah. Another way to think about the market taking a sell-off like that, it's like attention Kmart shoppers. We have a blue light special on your favorite stock. So,
and my philosophy is not to sell. I mean, look, there's a limited amount of real estate in the world. So why would you ever want to sell any of it that you get? There's such a limited amount that if you can get a piece of it, don't give it up. Well, there's this limited amount of shares in companies in the world. If you get a share of it, don't give it up. Hang on to that thing. So anyway, cash flow it. So we started looking at stocks that were, cheap. And we love to find stocks that are cheap. You make your money in a crash, and you can't always get a good crash like COVID was beautiful. Everything went on sale if you just look at a chart. But there was a stock that I purchased quite a while ago, and I think I might want some more of it. It hasn't gone up. In fact, it's gone down since I bought it, which means I like to buy more because I don't need it to go up to make money. That's what people don't get. As long as the company is solvent and paying the dividend, my cash flow's there. As long as the renter is in the house and paying the rent, my cash flow's there. So I really care about dividends. And there's one particular stock that's it's got a monster dividend. You got to be careful with this because more reward means more risk just inherently. But we were looking in the Mentor Club at a company called Altria, the symbol's MO. So what do they do? And, tell us about what you know about Altria in terms of their
Altria
price.
is a fancy name you get when you rebrand Philip Morris. They're a tobacco company, and they've been around forever, and they've had different holdings over the years. For at one point in time, they held a bunch of food companies like Nabisco and whatnot. But they've spun off different divisions over the years, and Altria is kind of the parent company that was always been there. There's also a Philip Morris that's PM that's also publicly traded. That's also a great dividend type paying stock.
Yeah.
So this is a tobacco company, and again, some people may have qualms about investing in big tobacco.
Well, I tell you, do you want to invest in casinos and make money off of gambling? Do you want to invest in Budweiser and make money off of, mad mothers against drunk drivers? I'm going to be happy with you if you do that. But on the same token, I know that all those things I pay for with taxes to counteract the healthcare issues that are with some of those sins type of stocks. So I don't mind getting paid because I'm paying for me anyway.
And it's also important because if people don't have vices, they have no bargaining power with God. So they can't promise to quit something if it'll just save them this one time.
I don't have any bargaining power anyway. But in reality, this stock's an interesting one because it's really low, and we have what we call 4 pillars of investing. First, when we look at a company, it's a big company. They make money. They got a lot of customers. So that's, is it fundamentally viable? Yeah, it's to be a company that, when you hear a name like Paris Hilton, she's an heiress to a fortune. Well, if you had, someone that was the Philip Morris heiress, they would be an heiress to a fortune, right? It's just a solid big, if you owned it, if you owned a lot of it, you'd be a rich person. Technical analysis is when we look at the pricing, and Noah's a master technical analyst. Where do you see the price? It's on what? Describe support quickly. What is support?
Support's at a price level where people are willing to buy things, and price for this in this particular stock, it's recently come down to around a $39 to $40 price threshold, and every time it dips down to $39-$40 in that range, people buy it up. And it's a price they've identified. That's a value. They like it. They want to own it. And so that creates demand. So support is a price level upheld by demand. Yeah. And then we have what's called resistance, which would be a price threshold where people tend to sell it because, they think it's too expensive or it's overvalued. And, this stock is relatively range bound between about $40 and $50, and it stays there pretty regularly. And so it's a pretty stable asset as far as price fluctuation goes. It's not a high volatility stock.
Another way to think about this is like gasoline. Is if gas goes really, really cheap, you might look at your partner and say, hey, I might tell Marcy, hey, let's go fill up the boat and fill up the truck and fill up the cars and fill up the sports car and fill up, I don't mow my own grass, but if I did, let's go fill up the lawnmower, right? Because it's cheap. And so buying drives prices higher. But if it were to get like $8 a gallon, we must say, man, we're going to buy a horse and ride a bike. We'd rather buy hay than gas. And we resist that so the price doesn't get higher than that. So it's just supply and demand. Well, here's what's an interesting thought. Tell me about, a dividend. You have 2 words that start with the D, dividend and distribution. And it's the same in real estate and stock. In real estate, if I take the profits from my rent and I actually decide to use it and, reinvest or whatever, that's called a distribution. So in a syndication, you have a whole bunch of investors that share, the interesting word there, they have shares of ownership. And when the money comes, we distribute it. Like deck of cards, we distribute it like dealing cards, all the money of the owners. Stock, we divide it. It's the same thing. So that's where the word dividend comes from. So Philip Morris makes money. And since I own the company, and this is where Buffett's brilliant. People want to be an entrepreneur, but they don't have an idea or what to sell. Well, Buffett never invented any of these companies. He just says, here's one, I'll buy it instead of invent it. And so I can actually share in the profits of this company, and I actually get quite a bit. So tell us about this dividend, and then when we come back from break, we'll talk about options as well. But let's just tell me about the dividend. What is it? How much is it? And how does that work?
Well, again, the quarterly dividend here is 98 cents per share. So that means if you own 1 share, you get 98 cents. If you own 100 shares, you get $98. If you own 1,000 shares, you're getting $980. And that's per quarter. And so it's income that's just passive income, Andy, and you don't have to do anything for it. The only thing you have to do is be an owner of the stock prior to the date of record and hold it through the dividend payout.
So times that 94 by 4, that's going to be $3 and a lot.
And 98 by 4.
98. Okay, so that's going to be just shy of $4. You doing your calculator
I
because we
am.
can't add in our head?
You can't get me to do math this time of day. $3.92.
$3.92.
So that's not a bad deal.
So divide that by the $40, the stock, you're about 9%.
Yeah, it's
dividend.
about $42 per share at the moment. So we'll divide that by 42.
We'll just do the math right here.
And that is a 9.3% dividend. That
return. Okay, so that's my baseline. That's
Yeah.
my baseline. So, okay, if I spend that $40, now I'm going to get $3 every year, and people are like, well, that's going to take 10 years to get your money back. Well, true, but we're going to add more income to that when we come back from break. But that's my baseline of 10%. What's cool is that's for the rest of my life. As long as that company's viable, what do I care? Okay, so if the stock goes to $30, does that necessarily change the dividend?
No.
If the stock goes to $10, does that change the dividend?
It does not.
So I have above my head right here a cash flow jack in the box, and Noah has above to his head you've got a cash flow jack in the box I can see on your shelf. And that's what we have to symbolize that, look, you have this machine that cranks out money, and I don't care what I paid for it. I pay for it once at $40. That's going to be my dividend. And they've had, because of inflation, those dividends tend to go up because the dollars are worth less, and so you get more of those dollars. And so, right there alone, if a person just learned that, if you feel as strongly that people will be addicted to tobacco as they are addicted to other stuff, and you feel that company is well run because they've been around a long time, that's 10% on your money, basically 9 point whatever it was, and the stock can fluctuate, and let it fluctuate. So that's that. Okay, when we come back from break, we're going to take that 10 and we're going to add to it. And we're going to add to it in 3 more ways. And we're going to quadruple our cash flow or better. At least we're going to do much, much better than this 10%. So when we come back, we'll dive into what we call options income. And remember, go to stockcastbonus.com and you can learn more about what we're about to say. So with that, let's have a little commercial break.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back from the commercial break. We're going to hop back in. So when we were speaking before, we talked about just buying a company and having it give us enough money that we're getting about a 10% ROI, about 9 something, 9 and change ROI. Well, there's another cash flow strategy that's very conservative. In the United States, you can do it in an IRA. And that means that, I might get paid to buy this. And my younger brother, I'm 13 years older than he is. So, I was out of the house pretty much when he was growing up. And he came to me on Sunday and he said, I think I want to start doing this. So I was like, awesome. So we sat down at my kitchen table and I told him he should paper trade this very stock. You should practice and paper trade. And so, maybe I could get paid to buy it. Now, this is a concept that's crazy for people. Is I could actually get paid. So let's say I had $40 and I wanted let's say I want a 5% discount. When that $4 would be 10%. So I want a 5% discount. If it's 42, I want to buy it at 40. Noah, if I promise to buy that in the next 30 days,
all right.
Okay, so the next 30 days, I say, look, I have $40. I don't want to buy it for 42. I want to buy it for 40. And if it dips down that far, I promise I'll buy it. By making that advance commitment, how much would they pay me for 30 days?
For 30 days, you're going to get paid approximately 18 cents.
Okay, so that's another 18 cents on top of 94, but that's not 4 times a year. that's that we times that by 12, because if I didn't get it 1 month, I could do it again the next month until I got the price that I wanted. So what's 18 times 12? Well, 12 times 12 is $1.44. I remember that from my times table, so it's more than that. So it's probably just shy of a couple more bucks,
that'd
right?
be $2 over the course of a year. 18 cents times
Times
12.
12. We'll annualize it.
All right. That is $2.16.
So another $2.16 a year added to my $3.92. What does that take our total to?
That would put us at $6.08.
And what's our total ROI, since you have the calculator handy and I don't? I don't have a calculator up here.
That would be about 14.4%.
Now, the reason I have this idea of constantly, if the stock goes up, I don't buy the stock because it didn't get to my price, but I'm still making that money, right, on trying to acquire new shares, right? The other thing that's happening, and you can scrutinize this a little bit because this is on cash, not on stock. So I get that, all you engineer detail people, I get it, basic concept. But the reality of it is up, down, or sideways, I get that money. And it doesn't matter if Altria goes up, sideways, or down. If it dips down to the price I want, great. Now, there's a reason I bring this up. In my home country, the United States, there's something called a 401k. And I wrote a book right there on how these 401ks suck. And if you have a 401k, think about this. What you've basically done is what I just did, is you made an advance commitment to buy some stock next month when you get a paycheck.
Yeah.
I mean, that's literally what you did. You just made an advance commitment. Say, take some of my money. I've got it sitting here. I'm going to allocate it. Problem is, you're going to pay the highest prices. I only said I want to buy if they're low. And a 401k guy's paying fees. Instead, I'm collecting a premium for my efforts. So they pay to buy stock. I get paid to buy stock.
Yes.
So we talk about the details of how this works in this class I told you to take earlier at stockcastbonus.com. Now, let's say I do own the stock. I finally get paid to own the stock. Is there more income I could have? Well, there's a movie called The Godfather, and what's the famous line? I'm going to give an offer you can't refuse. Well, certainly if the stock went to 50 overnight, I'd probably sell. Even though I said don't sell them, if it goes that high that quick, that's too big of a gain to just say no to. So even if I take a standard deviation, I say, look, maybe there's a 10% chance it might get really, really high here, and we have software that does this for us. For example, give me a let's use a fancy word that people might not want to get. Tell me around an 8, 9, 10 delta, maybe 12 delta, somewhere around.
Yeah.
Use a poor man's judge of maybe 8, 9, 10% chance it might go this high next month.
We could collect another 14 cents for promising to sell the stock out at $46.
So if I buy at 42 and I'm willing to sell at 46 over the next 30 days and make 10% more on the capital gain, I can get another 14 cents. So we just add that to the pot. So 14 cents, that's going to be $1.60 something, I would imagine, more that we stack on top of that. Now, the other thing that's cool about this is so far we've talked about 3 income streams. We've got 1 that comes from the dividend. We've got 2 that I could come around that stock that could come to me by promising to buy it low. I can get a 3rd by promising to sell it high. Think about that. Isn't that whole idea, buy low, sell high?
Yeah.
But what if you get paid to buy low no matter what, and you get paid to sell high no matter what? And you get your dividend no matter what the price does. So that's pretty cool. That's 3 income streams. And if you want to up your pay grade, you can double dip. And this is something we probably shouldn't even talk about on YouTube. Maybe they'll ban us. Maybe they'll take down the YouTube here if the AI, because we're going to use some words here that they might just say, oh, this is tagged for 18 and above. So, we got to be careful when we use the word naked, because we're not talking about that type of naked. What I will do is I have some cash set aside, and I always have extra cash set aside for risk management to tweak other things. I could actually double dip. I could write one of these promises and get paid that 14 cents for the shares that I own, but I could actually write that without even owning the shares knowing that I had the cash to buy it if I needed to. And so that's a fourth income stream, is I can sell. Basically, that'd be a cash secured call rather than a covered call. We'll do that rather than naked.
Yeah.
How's that?
Well,
So
that
cash secured put,
safer.
cash secured put, cash secured call, which is another word for naked that we'll invent. Covered call, dividend. That's 4 different income streams around the stock. Not all of which come. The 3 options come to me first before the price does anything. I mean, the price doesn't even have to move to make the money. I just get it up front, and then the dividend comes by just being ownership. So that's 4 different ways, and we could go on. We could go on, but that's the magic of understanding, stocks and options. And again, I'll just encourage you, take some of our free classes, dip your toe in it. It's funny that so many people will, I saw a Facebook ad today that someone said, yeah, you make money in like 6 clicks, and it was some cockamamie thing with no work. It's not about easy. It's about smart. And if you can learn this and make it simple, I mean, I'd rather bet on a good investor than bet on an asset class. Because if you get over the fight in asset class, you can find failures in crypto and success in crypto, failures in real estate, success. It's always about the context of the investor and not the investment. For example, people go out and try and do everything I just said, and they could lose money. It's not about the asset class. If the stock moves in a way we don't like, how are we going to react to that? What are we going to do with that? There are things that we do to manage risk. So anything you want to say about the big picture of that, Noah, the idea that, there's that, and this is what we do in the Mentor Club. We'll actually do these things where people follow along in their paper count to learn, and we'll play out all 4 of those scenarios. And, it's funny. You start with a paper trade account, start with $100,000 and see how long it takes you to build it to $1 million. It's not going to happen in 6 months, right? It's going to happen over a couple of years or a few years, but it's fun to do that. When ours hits $1 million, we reset it down to 100,000, and then we start building it over again. That's how we do it in the Mentor Club, and that's why people follow it so they can see how it works.
Well, it's a good time. We enjoy it. It's a different way of thinking about the stock market. I think when I speak to most people who aren't active investors or aren't participating in the market, even people who have 401ks don't necessarily have a good understanding of how the stock market can work. They tend to think of degenerate gamblers, buying, selling, day traders, that type of stuff. And that's all fine and dandy, but that's kind of a job. This is more of a passive income route where you're finding an asset that starts out with a cash flow baseline, like we described.
Yep. Start out with that 10 and then just start adding to it.
And then what we're doing is we're selling options, which are contracts that are promises to buy or sell the underlying asset at a predetermined price
that we want.
Yeah, that we want. And we're comfortable with it. And it doesn't matter if the stock price is moving up or down or sideways. We're clicking a button to sell a contract and getting paid for the contract. And we're at any point in time, we could sell the stock if we wanted to, but why would we? Because we get the dividend, and we can use the contracts to protect it and to cash flow. So one of the contracts we're selling is a put contract. That's an insurance contract. So you could buy the stock and you could turn around and purchase insurance on the asset
if you're worried. And you could actually do what Mark Cuban did. Mark Cuban did a caller on his Yahoo. He actually sold a call to pay for the put. And when it fell, he just made a fortune. So, if this is all Greek to someone, we'll learn. I think it's funny how I think that you can always tell someone doesn't know what they're doing when they start attacking an asset class and defending their own. Because if you don't like this, you got to knock on Warren Buffett's door, because he does all of these things we just mentioned. You got to knock on his door and tell him he's a moron. If you say, oh, real estate's a bad idea, and you made all these real estate analogies, you're an idiot. You got to go to someone like Robert or Kim Kiyosaki or Ken McElroy or Than Merrill. You got to tell these people they're idiots, and they're not. If you say, oh, crypto's bad, you're going to find people who've made money in crypto, and it's just about financial education. And having the humility to learn, really. And rather than a state of bravado of, oh, I know others. So many people who are not rich, show out this bravado about what is, good and what is bad. And if you look at their financial statement, they're not multimillionaires. They're just not. So
No, and this is a fun. So if one thing that to think about, just to put this kind of plant the seed in your mind, if you have a 401k or you're investing in other things like mutual funds, the fund managers who are taking your capital and putting it to work in those stocks, I guarantee you they are selling call options on the stock in the holdings that they have.
Yeah,
they're selling. They're doing this stuff with your money.
Yeah, the reason we know that is because there's the volume of the options market is astronomical. It's not as big as the bond market, and it's not as big as the currency market, but it's a big market. So, Fantastic stuff. Noah Davidson. So we're seeing a bit of a pullback in the broad market. This might be a time to buy the dip. What I love is at dips, we can go even lower, and we can sell those puts. That way, if it dips more, we get a really good price. If it recovers, we're pulling a pretty good percentage on our cash rather than in savings account. We just stand ready to buy assets, and we get paid way more than way more than a savings account could by standing at the ready to buy assets. So when the market drops like this, I don't just buy, I make promises to buy if it drops even further. And if we're lucky enough for it to drop further, we're picking up even a deeper discount. But if it recovers, we're keeping the premiums from the promises we made to buy if it goes deeper. A person who doesn't know how to do that probably isn't that serious about their financial education. So last time, we'll put the bonus up. Go to stockcastbonus.com if you want to learn more of the detail about, before anyone tries to pick it apart. Go watch it and watch how we do it and see real examples from Warren Buffett and other examples. That you can really take some time and focus on it. So if you've been listening on your commute, when you get home, stockcastbonus.com. If you're right now on your phone, go there now, stockcastbonus.com, and add to your financial education. Noah, thanks so much for joining. Love the conversation with you, and love having a great friend that understands how this stuff works to continue to mentor me.
Thanks so much for having me. It's been awesome.
All right. This has been the Rich Dad StockCast with your guest host, Andy. Usually the guy who gets interviewed. So this time I get to be the guest host. We wish you the best of luck and the best of success in your financial education because we do know it will elevate your well-being, your financial well-being for sure. So we'll see you next time.
This podcast is a presentation of Rich Dad Media Network.